From Barangaroo Studios, the AusBiz COB is the key stuff you need to know about the day in business and finance.
Welcome to the COB. I'm Juliette Sarli. Well, of course, as we know in markets, what a difference a day can make. We saw that tech rebound coming through on Wall Street overnight. Nvidia clawing back around 8% of its hefty losses, and a very solid day on our market today as we saw that cooler inflation print pushing the local market towards records and pushing the Aussie dollar lower as a raft of economists now start to say that they do expect that there could be a rate cut from the RBA next month, including NAB RBC revising some of their earlier calls with a more bullish stance now. So the CBO 200 there up by 0.5%, half of 1%. The ASX 200 up by 0.7% to 8,456 points, and not too far, I think, off its all-time highs. So let's get to the themes of the day. And of course, we are within this record reach on the ASX 200. Some very hefty gains across every sector today. You certainly saw the tech players coming back. Of course, the fact that we don't have huge exposure to AI and tech did buffet us somewhat yesterday during that rout that we'd seen in global markets. But the tech stocks we do have did very well today. The IT sector up 2%. REITs also looking good, as were utilities. Quite a few broker calls on some of these data centres and stocks within the data centre thematic. Energy players also coming back, and financials looking good as well. So of course now it really does put paid to whether or not we are going to see a February rate cut, after that core inflation and the trimmed mean also cooled in the December quarter, 2.4% annual basis in terms of annual inflation versus the expectations of 2.5%. And of course, that did see the Aussie slump. The question now, what happens, particularly if we see tariffs slapped on China, to that potential imported inflation we could get with a weaker Aussie? Let's have a look at some of the sectors of the day, kicking it off with those tech players that I mentioned did rebound. WiseTech up more than 3%, Xero up 2.4%. NextDC was one of the hardest hit yesterday, continuing to slide another third of 1%, and Zip up by 4% today. A quick look at the energy players as well. We saw Woodside up 1%, Santos slightly higher, and when it comes to the banking players today, you've got CBA just a marginally fraction lower, but the others all looking good with the exception of NAB, which was down 0.8%. Looking at some of the corporate stories, of course, we had a range of companies coming through with quarterlies today. Pilbara's shares doing well. It did see an uptick of 3% in production in the last quarter. Gold Road also posting record December quarter gold sales, shares up almost 5%. Whitehaven Coal, a slight gain there. It posted a near 93% rise in second quarter production thanks to strong performance at its New South Wales mines and recently acquired Queensland mines. And Star Entertainment, never far from a headline, up 15% today on news that it is planning to sell its Sydney events venue. Let's get more on market action now, and welcome to the COB, Mark Gardner from MPC Markets.
Good afternoon.
Good to see you. So disruption, really the key thematic here, and the knock-on effect from what we've seen with the likes of Nvidia following the DeepSeek shock, I guess.
Yeah, I mean, it was very interesting watching, well, my X feed over the last 24 hours. We went from the depths of despair, Nvidia was never going to make money again, to data centers were never going to be stacked, to all of a sudden going, well, actually this makes it more accessible. It lowers the barrier to entry. We actually end up selling more chips, et cetera, et cetera. So I think it's sort of somewhere in the middle. I think the stranglehold the Mag 7 have on the AI technology progression at this stage will loosen somewhat, and I do think overall the I think we'll see a much broader based set of winners rather than the likes of just Nvidia. I mean, there's a lot of debate as to whether it's a fake or whether it could actually achieve what it's said to achieve at the cost. But the bottom line is that at the end of the day, costs will start to come down. I mean, we're looking at queries dropping from $30 odd down to $2, for instance. Down to $1. So, cost reduction is going to be really good and really open it up to a lot more small and medium-sized enterprises. So I think the knee-jerk reaction, the data centres particularly, is really unwarranted because I think we're still going to need that capacity. Good example I sort of use with clients today is, we didn't go from dial-up to broadband and then go, oh, okay, we're done.
Yeah.
Like,
There's still so much disruption
well,
to come.
essentially, I think it really now enables a lot more players to come into the market, not just those big seven. So overall, I think it's a really healthy thing. I think Nvidia will generally suffer, but no one gets to keep a lucrative monopoly with an 85 to 90% margin forever. I mean, history is littered with examples, and no one ever gets to keep it. And AI is a very fast-moving technology, obviously. ChatGPT was only around June 2022. So inevitably, people were going to come and compete with Nvidia, and that efficiency was going to come. So, but I do see it being overall a very good thing.
Yeah.
In terms of the energy sector, we saw obviously uranium getting hit. I think there was a little bit too much over-optimism about Trump's plan, because obviously those data centres were aimed at Texas, where they've got a lot of excess natural gas. So I think that's just unwinding a little bit of that over-enthusiasm. But I think that thematic still plays overall. I think we will, as a species, we always tend to fill the capacity that we're given, and I think, like as I said, I think there'll be more players now come to the fore, and I think it'll actually enable a lot more innovation.
Yeah.
Because I think those larger companies that have had that stranglehold on it have really had control of the direction or the narrative, and now they'll be back to the likes of what they were in the internet boom, where a startup can make a difference.
Well, it's given us something other than the RBA to talk about, but we've still got the RBA because we had inflation today cooling. So whether or not you're in that camp that we do see a February rate cut, which is something that we've been trying to anticipate, how do you see that play out into markets? Because as I mentioned, the dollar fell, the market went up. Yeah, look, the dollar fell. The low Aussie dollar is obviously, as a net importer of consumer goods, we're going to be that lower Aussie dollar is going to be mildly inflationary. A 25% reduction in electricity dragged it down quite a lot. But if you look at insurance, meat, fruit, vegetables, eggs, education and rents, all were up 5% plus. Yeah.
So I think the RBA will read through those, the government subsidy number and not just look at the headline. And I still think they can wait. I've never been a fan of a Feb cut at all. And look,
especially because the new board makeup too, right? It's probably
and they don't tend to cut leading into an election.
Yeah.
They tend to try and stay out of politics as well. And obviously you've got the same problem with the Fed meeting in the next couple of days. I mean, they're really hogtied. They can't do anything because Trump's announced 100% tariffs, 10% tariffs, 25% tariffs. He's abolishing income tax. So how can you possibly set monetary policy when you've just have got the equivalent of a headless chook running around with fiscal policy at the moment? So until things settle down, that was off the table anyway, but they can't do anything. And until we see what decisions get made on tariffs, I think the RBA can afford to wait one more month. I don't think there is no major rush. Maybe they go, maybe they don't, but we're still sort of sticking to late Q1, early Q2, and then 1 to 2 cuts essentially, and we will see how the inflation story goes. And
speaking of inflation, we are going to get a Fed decision as well. No change expected to the Fed funds rate, but what are you expecting from the FOMC?
Not a hell of a lot. As I mentioned before, it makes Jerome Powell's job very hard. I think he might probably put a shot across the bow with Trump telling the World Economic Forum that he'll just demand interest rates go down. I think Powell's had a bit of a history of putting his foot down and clearly outlining the fact that it's not dictated by the president, it's dictated by the FOMC. Obviously they've got advanced GDP and PCE numbers towards the end of the week. So and a lot of earnings going on. So I would just say they'll probably stick very similar to what they had. I don't think a lot's changed in that December period, and it'll be largely more of the same. I would imagine. But it's just very hard to formulate policy when realistically you don't know what's going to be happening from a taxation standpoint for the economy.
Let's talk about tariffs. I had a great chat with Jonathan on The Trade earlier today. He brought along some great memes as well, but he's written, or you've written a piece, I should say, about whether or not we should care about some of these tariff threats.
Yeah, I think China's playing the long game here, and they've been, obviously they've been dominating more EV, critical mineral markets, manufacturing, and they've always been renowned for low-cost labour and fairly crude manufacturing. But their high-level manufacturing now is really lifted its game. They've had a few advancements in some of those high-grade chips, which they've been banned from. And look, their Silicon Valley equivalent is really cutting edge now. Obviously, DeepSeek is one example, but I would expect to see more innovations come out of China in that regard. I mean, they've been planning, a national data set since about 2016-17. The US can't plan a week ahead at the moment, particularly with Trump in. So that is kind of the benefit of their closed shop policy or political system. But they're kind of sitting pretty, and I'm not entirely sure whether they care too much overall, because obviously they've got their own internal problems. But how do you tax something like an AI?
Yeah.
So whether Trump comes out, I highly suspect if there is a significant threat to OpenAI, given the announcement he's just made with Stargate, that there may be a ban. But who knows? Well, we just have to, as we know with Mr. Trump, President Trump, we just have to wait and see. But there's certainly a lot to think about. But I think we are starting to shift out of that phase of just that first phase of the AI where it's all about the chips and the infrastructure, etc. And we're starting to look forward, particularly at MPC, to phase 2 with some of the software and businesses that are going to bring those productivity gains, which we'll talk more about at the High Conviction tomorrow.
Absolutely, yes, of course. We've got that tomorrow, but we're not even in February. Still so much happening. Never a dull moment, is it, Mark?
No.
Thank you. Mark Gardner from MPC Markets with us. We were talking about the fact that we looked into a lot of the companies with quarterly updates, and it was a technical session on the call today in terms of gold as well. The stock of the day was Gold Road Resources. Michael Gable from Fairmont Equities and David Novak from Wealth Wise Education joined Andrew.
When the price of gold broke out in US dollar terms to a new high, Gold Road was still languishing around $1.50, $1.60, but we could see on the right-hand side it's finally made an upside break earlier this year, has gone up a bit vertically. So, I think on the back of today's announcement, it's down slightly, maybe 0.5%, not much at all. But I wouldn't be surprised if it cools off. I mean, if it does cool off a little bit here, I think that would be a buying opportunity. That would be healthy.
So there's a lot of undervalued explorers out there that are, primed for a takeover actually by the majors. Because why would you go drilling looking for it when you can buy these companies on the market? They're so undervalued with the gold resources they've got in the ground. I've never seen anything like this in 40 years. I've never seen the sector so undervalued, and especially the explorers have not moved. It's bizarre.
A great day on the market. Let's have a look at some of the leaders that helped push us there, including Star Entertainment on news it's going to sell off its Sydney entertainment venue. Bellevue Gold, also a front runner, as we saw a lot of momentum in some of these companies with these quarterly updates. Green Critical Minerals too, Deep Yellow, as we saw a rebound in the uranium players, along with Boss Energy, which was up by more than 7%. Also a broker comment there too, pushing that one higher. To the downside today, South 32 along with Coronado Global Resources, Sayona Mining, Viva Energy and Ventia Services. In the small end of town, we saw momentum from plenty of gains there, up by almost 19%. The Star Group, of course, makes it on that list too. To the downside, though, we had Playside Studios down about 45%, and Aroa Biosurgery down by 22%. Let's have a look at what we are going to see in the US session. Of course, the FOMC decision, also Bank of Canada out with a rate decision, and it's a big one in terms of some of these big earnings that we've got with the likes of Microsoft, Tesla, Meta. I spoke to Angelo Zeno from CFRA earlier today about quite a lot of those companies as well. You can find that, of course, on our website. And tomorrow we've got RBA official Brad Jones speaking, the International Trade Price Index for the December quarter. And we continue having a deep dive, if you like my pun, into some of these miners' quarterly updates, including IGO and Mineral Resources and Karoon Energy. Now, Mark reminded us, but our first investor event for 2025 is happening tomorrow. So High Conviction, a selection of the best ideas for this year across public and private markets. We're going to have some of the country's top investors with their high conviction concepts, whether they be themes, strategies or individual stocks. Registration is, of course, free. You can get all the details, ausbiz.co/conviction. Let's see where the market has ended the day's trade. The CBO 200, I believe, is tracking higher, and the ASX 200 is up 0.7%, 8,455 points there. Some very solid momentum with every sector, I believe, moving higher. Just a bit of a switch out of the miners on the close as we saw that weakness coming through in some of those iron ore players, but a very solid session. A new 20-day high on the ASX 200, 8,447 points is where we finished. All right, we will see you live again from 9:45 a.m. Eastern tomorrow. Have a good evening.